Welcome back to Uncommon Wealth. I am your host, Jay Mack. On this podcast, we talk to founders, operators, investors, high level advisors about what really happens after success starts showing up on paper. Not just growth, but structure. Not just making money, but protecting it, scaling it, transitioning it, thinking intelligently about liquidity, taxes, succession, and long term wealth architecture. Today, we have Jack Mullen. Jack has an institutional background with JP Morgan, GE Capital, and today leads Summer Street Advisors. It's a firm that, and he's going to explain it to us, but it's a firm that's deeply involved in real estate advisory, private credit, portfolio strategy, family office consulting, and institutional risk analysis. And what I appreciate about Jack, and he's going to explain this as well, is he thinks like an operator, but also like an institution, right? So today we're going to talk about risk, tax strategy, concentration, liquidity, succession, private, all that stuff that people often overlook when building wealth. So Jack, glad to have you on, man.
Nice to meet you. And again, appreciate it. Thank you for the nice introduction.
Yeah. So that was all from our first phone call. So when you left, let's just jump right in. When you left GE Capital and launched Summer Street, what structural gap did you see in CRE, in that CRE advisory space?
It's a great question. I think I still see it today. I think that in what you're doing, with your clients is, really providing, and we're talking about AI and a lot of this stuff, which is great. It's understanding data and being able to put in data in a very structured way. But at the end of the day, if we're running businesses or making real estate loans or investments, to really be thoughtful about, what are we doing? To understand that particular market, understand that particular security, and I need to be thoughtful in having somebody that can guide you through that process. And that's a lot of where we've had success. If it's helping a Lone Star buy a $3.5 billion bank, or helping another group, last year collapse 4 CRE CLOs, or really understand the what they don't see. So that's a lot of what we really provide. Try to provide that institutional transparency, but at the end of the day, understanding what's important to you as a family office, as an institutional investor, whatever that may be, as you're potentially pursuing returns, which you believe is opportunistic. However, you got to make sure you're not all created equal,
Hmm.
and just think that stuff through.
In today's environment, where do you see institutional capital consistently mispricing risk?
I think it's great question. I think particularly in the private credit space. And last week I held we held an event called CRE Leader Circle. We do it every six
What's it
months.
called? Sorry, what's it called?
The CRE Leader Circle.
CRE Leader
We held it
Circle.
at the Cornell Club. We had about 50 people, all, hedge fund, private equity, bankers, across into family office, and in talking about credit, talking about risk. And I think one of the things that everyone believes or has believed up to this point is that, we can pursue. And again, up until a couple of years ago, everyone's on the fixed income side looking
Hmm.
for return. You could basically, there was no return. So a lot of people exploring private credit. You look at the matrix, you look at the chart, and you say, hey, look at where we can get up here with relatively little return, relatively small sample size, small window. But I think as you're looking at the blue owl and the headline risk around that, or the news around that, not for everybody. And I think that's where, in terms of if you're a retail investor or an institutional investor, where you're allocating capital, you got to make sure you're thoughtful, understand the risk, and understand the return. And we try to help groups do that.
Okay. Let's kind of shift the paradigm a little bit and go towards owner operator. What changes structurally for Summer Street when you cross that $10 million threshold? Is it simply valuation? Is it credibility? Do your internal complexities change? Um, what are your
No,
thoughts
it's
there?
a great question. We have a number of family office clients, and again, this happens with everybody. You're smart with a smaller business, and then as you grow, and you can't play every base, right? You can't, And I find that if you're running a restaurant operation and you go from 1 to 3 to 5 to 10, or if you're running a business and all of a sudden you've had some success doing something in a particular market, multifamily in Miami or whatever it may be, and then you're looking to expand. because guess what? With success comes more capital and potential more opportunity. But I find that making sure that as an organization grows, you stay core to what you understand and what your mission as an organization and values. And then also in terms of pursuing that, I find that a lot of times, especially in our space, people have had success, but sometimes, they pursue strategies that may not be aligned with what's special about got them there, so to speak.
What would be an example of that? Do you have one?
Yeah, 100%. I think a lot of times on like say multifamily, developers or people like that may have had success in the Carolinas or wherever it may be. Now they're trying to, potentially, hey, now I want to go. I've had some success, bought some properties or did some development. I'm going to go to a new market. I'm going to go to
Mm,
the Phoenix market.
mm,
Anything that's unique, in terms of your relationships, your bankers, your operational people on the ground, that's been great there.
yeah.
You don't have that. And that's the thing I always say to people is, what's your special sauce?
Mm,
That I get pitched a lot from a lot of people about trying to raise capital, trying to do investments, or be it a debt fund, whatever it may be. And my fundamental question is always, what's unique about your strategy? And in terms of what's going to make me feel compelled to give you money or give you time or whatever it may be. So that's a lot of what we see. People kind of lose their way a little bit, or they don't really. That's a lot of what we've seen over the years.
that reminds me of something I was told. Obviously, we're in the financial space, but very different businesses. And someone told me a long time ago, you're going to get bored with the market long before the market gets bored with you. Right. And so we want, as operators, entrepreneurs, founders, we tend to want to chase the shiny object. Right. And like to your point, they're killing it in South Carolina. And then all of a sudden they want to go to Scottsdale. Totally different marketplace, totally different facts and circumstances. You have to build your like you said, your infrastructure doesn't necessarily travel with you, right? Your contacts and what makes you unique in that one space. So that's a good point. And it actually is applicable and apropos across many different businesses as well for all the different founders and owners listening to the podcast. When your business enterprise starts to grow to that number, does value start to matter differently at that point? The enterprise value, does it start to sit differently in your mind?
It's an interesting question. For me, and I was talking to someone about this just yesterday in terms of, numbers and value and money. For me, it's about fundamentally comes back down to, strategy, in terms of what are we trying to do as an organization? And I've seen this across the board. Like I give my restaurant example of, a Denny's operator growing and expanding. It's always about making sure we're kind of hitting on as owners, founders, we always have that interest, right? We always get intrigued by that shiny new penny, right? That potential
Mm-hmm.
ways to, because we've had some success. But I'm a big believer of if I'm swimming with the buoy, try to stay in my lane. But I also realize that with pursuing any strategy, there's always variations. The way you and I envision pursuing going a go to market strategy or whatever it may be, we have a vision, we have a game plan. However, having the people that surround you. I have an independent board that I go to, right? I have internal people that we work with just to make sure that what we're doing is we're staying the course, especially if we have third party capital, we have family office money, whatever it may be. I want to make sure that what we're doing, we've set out a course of doing something. We're actually pursuing that strategy. We're also giving people timely feedback, reporting out wise, how we doing. And I think sometimes I find too, not everything goes well. But guess what? I wish I bet 1,000. Guess what? We don't. But I think being able to kind of communicate that in a confident way to our investors, to the different people we work with. Hey, it's taken a little bit of time. It's a challenging market, whatever it may be. But to be astute with that, and I think that in this day and age right now, we're finding a lot of folks, especially on the capital side, that have made loans, made investments, and you got a lot of investors that are saying, "Where's my money?" Especially as the group is pursuing another fund or whatever it may be. I
Yeah.
think it's
Yeah.
important stay the course on the reporting side. Know the numbers. Your numbers are important, and to be able to do that in a thoughtful, methodical way, and then to report out good news, bad news to investors.
Well, the next, series of questions again is kind of thinking like a founder and thinking about what you've built. You advise institutions on capital stack, risk and fragility. if you really internalize that and think about Summer Street, where does fragility hide inside of a firm like yours?
It's great. I think anytime, I'm again, while we're advised people in the debt space and things like that, I would just say that, and I come from a background where we're trying to optimize return in terms of whatever it be, IRR or whatever it be, and we're always thinking about optimal exits and things like that. Life's not like that. You have things, I was just talking to somebody about, you have things like September 11th, you
Uh,
have the GFC, you have things like COVID, and those are these black swan events. And I think that, you need to be able to kind of run your businesses, again, not to perfect. You got to know your numbers. And I think knowing your numbers is core and is key, in terms of reporting out, knowing if you're making money, not making money, and all that type of thing. But I also believe not pricing to perfection, in terms of debt. You get a lot of people will optimize, hey, if I can finance a project at 80%, I may pay a little more because it's, again, debt is cheaper than equity, right? So if I can optimize that, I can price it. But as we all know from what happened during COVID, things take longer. And, anytime you have offer someone else a seat at the table, be it the debt provider, whatever, you got to be able to kind of you got to be able to absorb or understand that risk, and being liquid and because it affords you the opportunity to, when things do go sideways, one, number two, as entrepreneurs, if we see an opportunity out there, we have capital to pursue it. It affords us that opportunity as well.
and that's also where wisdom and experience comes into play as well, right? I mean, you can read the book Black Swan, you can talk about a Black Swan event hypothetically, but if you've never lived through a 9/11 event, if you've never really lived through, I mean, obviously they lived through, but from a business enterprise perspective, the impact of a COVID environment, especially in the CRE space, you know, how do you prepare for that? How do you model that? How do you protect that? And so there's a little bit of, or a lot of wisdom and knowledge that comes into play as well, right?
No, I think sometimes you and I both know, anticipate and unanticipate. You and I wake up every morning and, do whatever we do. We work out, we do our thing, go to Starbucks, and, then we open our phone, right? And what do you see? I remember back September 11th, I was working down in Tribeca,
Mm,
right? And we're right there, and all of a sudden, beautiful blue day, and all of a sudden you see this activity. So I guess my point around that is really, having my thoughts around this are, have a vision of your business and how you make money and what you're doing. You got obvious ideas on how to grow it and expand. Listening to the market, understanding clearly. You may not like what you're hearing from the market. Risk on, risk off. Right now, it's a very difficult environment. Rates are higher. It's hard to do things, hard to find deals. But you've got to be able to kind of play what's in front of you and have a game plan to be able to react to that and go to market and I'm always a believer in talking to people like yourself. I want to understand what's going on in the market
yeah.
and be able to kind of obviously provide a solution, provide an insight. It's a lot of what we
Well, let me
focus.
ask you another pseudo Black Swan event. What or how much of Summer Street's enterprise value is directly tied to you, Jack? In other words, if you stepped away for 12 months or indefinitely, what happens?
It's a great question, and it's something that when we first started, a lot. Now, not as much, but it is a risk. And I think that's one of the reasons why. And I have a board, and and one of the things that we've done in terms of, I have a key number two person. We're also elevating another person, COO. So that, and when you are looking at outside looking in, and that's the reason why being self-aware, really, I think in terms of, again, I think we do great things, but I have bringing other team members along, getting them integrated so that while I am for the enterprise value of this organization, if I were to sell it tomorrow, I'm a very key component of it. But I'm
Hmm.
looking at that, trying to mitigate that risk. And
How
I think,
much?
yeah.
Sorry, go ahead. Keep going.
No, I was just going to say that's the reason why just being aware, read the room, right? And I think just we all, hey, I love having Summer Street. We've been doing it now since the GFC, which is great. We've had a long, consistent track record of profitability and growth. Best year ever last year, but be able to kind of, in context from that, be able to kind of, be able to kind of read that, understand it, mitigate that risk through your own organization, whatever that may be, so that if you ever want to have a liquidity event or thinking about this, I'm always like, hey, I want to be picture ready.
Yeah.
And we all know there's certain things we all do well. There's certain things we don't do well. and being aware of those things you don't do well, so that you can anticipate the black swan event potentially, as customer concentrations, whatever it may be, or where's the sales get generated, whatever we all have unique situations. So that's how we think about a lot of these things.
Yeah, and unique skill sets and unique, unique purpose and what you're genuinely good at. And then as business owners, we all have those things that we're genuinely not good at, but we have to do because we're the owners or the founders. If you think about how you create a founder-free Summer Street where you're no longer the center of the Summer Street universe, what are just not in any detail, but what are some of those things so the listeners can start to think about it themselves, where you feel like, all right, I gotta do this, and this to truly make Summer Street founder free.
I think it's funny. You've already experienced a little bit. I think before we started this call, we talked about places we've been on vacation. I think being able to kind of, step away for a period of time, a week or a period of time. And I'm less involved than when I first started, in terms of, being involved in all the minutiae and detail. I think really it's, looking at your own organization in terms of what is the product offering and whatever. We have 4 lines of business. We do underwriting, we do asset management, we do act as an appraisal management company, and we do site inspections. We've got a lot of broad things to know the numbers, and we report that out. I have an independent accounting firm that reconciles and does that all on a monthly basis. So numbers are robust and that reports out. But I would say specifically, I think that in terms of here, curating and developing managers, I have people. We do quarterly. We get goals and objective for every person at the organization that we set against a budget. Everybody, in terms of the reporting out, in terms of doing that, and then I would say trying to elevate the people that are key contributors, not only internally but also to the market, so that people don't just see Summer Street as me, right?
Right.
That's the risk or the downside, but that Jay or John that are running risk and asset management, Courtney that's running HR and the site inspection business, be able to recognize that. And I would say too, if I were to get, and I can role play this, if I were to get hit by a bus tomorrow, I want to step aside. How would we be affected? And to really react that way. So I think just being situationally aware, understanding those risks and thinking about it and how can I mitigate it. And I think that's where I've also played with my board, and I've already started taking steps to mitigate that by elevating certain team members. I'm in the process of hiring 1 or 2 salespeople for the sales gen. So it's thinking about this thing.
Talk to us about your board. How did that come into existence? Because that is a big step, right? For somebody to bring on a board to help, provide advice or report to of a company that you built yourself. So how did that come into existence?
Yeah, it's an interesting story. Part of my GE days, I had a startup and a guy with a Goldman partner, and he had a board, and he said, hey, basically the reason why I have these guys is subject matter expertise, but I do things well, but sometimes I can't talk to my employees or people within my organization.
Mm,
Sometimes it can be a lonely place at the top for founders, independent group we could talk to about HR issues, capital, whatever it may be. So
yeah.
I got the thought behind it. And then I was running one day with another friend of mine, and he told me I had this unique group of individuals that he's working with. It was SCORE guys, the retired
Hmm.
business executives, and they had helped him affect a sale and purchase of an entity that he was buying. I said, I'm running with this guy. And so when I first formed Summer Street, I reached out to my friend and I said, Vance Ward, who is no longer with us, he was the Canadian president of the Canadian equivalent of Alcoa, and another guy, David Sloan, great guy, that managing partner of a law firm, and Dick Kelsey had run a managing for a valuation firm, and another guy. But again, I had 4 team members, and I basically, met with them. I meet with them monthly, every month, getting together with them. We have an agenda. I report out my financials. We talk about marketing. We talk about sales. We talk about all sorts of different things. And generally, every meeting we have, I put a challenge to them, whatever it may be. How do we manage, putting together a budget? How do we manage growth? How do we
Yeah.
manage whatever it may be? So that's how that started, and I've been doing that now since 2010.
I think that's massive.
So it's just having that for me, it's the discipline of forcing you or I to get together on a monthly basis to put together that agenda, pulling all those numbers together, and be able to have them question you or celebrate the successes, disappointments, whatever it may be. But just to have, and they've been down this path before. The senior executives running their own firms
Mm-hmm.
and whatever it may be, and one may be accounting, one may be marketing, one may be legal, but all you have that independent group to be able to go to when you have a challenge or something. We all have them, right? Wake up and, oh my gosh, something happened, and how am I going to deal with it? And then you
Yeah.
kind of go to them and whatever it may be.
I think that's massive for the listeners. And, we all have business contacts and relationships. And I think, it doesn't have to be a formal board. You can create an informal board of advisors, right? But somebody that's not in your industry, somebody that you respect has built something or is building something that genuinely cares about you and you care about them. I think there's quite a bit to that. And I think that's a massive thing that a lot of business owners don't do. They either don't think about it or they avoid it because they're afraid to be told certain things that might be uncomfortable that they don't want to take action on, right? And they just kind of bury it. But that's a whole nother podcast. If growth paused tomorrow, would Summer Street still feel institutional, or would it start to shift more back to founder driven?
It's an interesting question. I believe that we have a good core base of clients, right? So even if you said, hey, no more, no mas, I believe right now we would probably the way I would probably focus, I would probably ways that we potentially deliver a better service, right? Maybe using tech. I think everybody I talk to right now talks about AI and how we're,
Mm-hmm.
which is
It's
great.
everywhere. Yeah.
Everybody, but I think for me fundamentally, it's John, it's you. It's well, we're using these tools. And when I first started my career, and I kind of say this to some of my team members, when I had my 12-seat calculator and the dinosaurs still walking, which is all great, but I think we're using tech. Again, I using Lotus 123 when I started, right? That was the fancy calculator back in the day. Now we're
Yeah.
talking about AI and processing data, but I still want John's view and guidance as it relates to how to approach the market, how do I deliver our services, how do I establish my accountability. All of these things are key things to people. And this is this is still a people business. We might have things to be able to help us along the way, AI, calculators, and things like that. They've changed over the years, but it's still a people business.
Understood. Another curveball. If someone applied institutional grade risk management thinking to their personal estate and liquidity plan, thinking about life insurance and liquidity, what do you think that would look like?
I think that it's understanding risk and where you are in the life. It's like life cycle of a deal. It's if you're
Mm,
doing whatever it is, and it's funny if you're earlier in your career and you have a lot of responsibilities, right? You need to mitigate that in some way. And insurance, say that you're earlier in your career and you got you've got a great track record. You're making good money, but the reality is you got a young family. You got maybe you're blessed. You have two children, and potential college and earnings. And if that, unfortunately, God forbid, if that stopped with you, I'm always about my wife, my kids. I want life to continue. So I think in terms of having a risk, again, I'm all about risk mitigation, but
yep.
understanding where I am in terms of responsibilities. And I look at kind of those responsibilities the next 20 years for my family. Insurance is a very viable alternative. But if you're at the other end, maybe you're kind of, for me, it's understanding the risks, understanding the potential obligations I have, and how do I mitigate it.
Do you feel most founders actually operate that way personally, or do you think that there's a delineation or complete segregation between how they think business and how they think personal?
It's hard to say. I look at, again, I have a responsibility to first and foremost my family, in terms of, and I look at my family, my immediate, my family, but I also look at my work family. And the way I run my business, I run things, oh, I'm an entrepreneur. I'm also very risk averse in terms of the way I capitalize myself. While I have access to bank lines and things like that I use from time to time, I also believe leverage can destroy people and organizations.
Yeah.
So I'm super careful and mindful of that. But I look at John as I have a financial responsibility, a moral responsibility to not only my family but my work people, and I
Yeah.
expect the same from them in terms of commitment and trust and loyalty. And I look at this as a journey for both of us. So that's how I think about risk and just being thoughtful on both sides.
Couple more minutes left. Let me ask you a few more questions. This has been really good, by the way, Jack.
I appreciate
For
that.
founders in CRE, what's harder, giving up equity or giving up control?
It's an interesting question. I would say, you can create within an environment. Again, I'm looking at it like people here. People always want to. How many people want to be my partner? And I can create a financial partnership. I can create a partnership, make you an equity partner. I don't. But I would, for me, and it's not about control per se. It's just about decision making. I can create a financial framework where you are like an equity partner, but you get paid like that. I would
Mm-hmm.
so and specifically answer your question relative to what is more difficult. Probably control.
Control. Yeah.
Yeah,
Yeah.
I think candidly that's the biggest challenge I think I probably face, and I need to, sometimes you need to manage through that. And you're talking about Jack is the founder, or
Yeah.
anybody else you're talking to, they're the founder. And I think what's the biggest thing that we built these baby, we built this baby, and making sure that and giving up control or empowering people within our organizations that we trust, that we build that trust and that credibility and that know-how. I think that's, at least for me, that's probably the hardest.
I appreciate that. That was an unfair question, but I
No,
appreciate
it's a
you
great
digging through
question. Life,
it.
can't throw a curveball. So that's what it's all about.
Last one. What does building something that lasts for 50 years or more actually require that most founders underestimate, in your opinion?
People in management. I think it's people in management. I think the reality is, I know we all have them. I'm sure you have a number of people here that have family members, right?
Hmm.
And some, candidly, a lot of it, we know, second generation flames out, right? Doesn't have the passion, the drive that we have. So I think thinking about an organization sustainable. I get hit by a bus tomorrow. My hope would be this organization would continue because we have. But John, those are the things that worry me. I want to have something sustainable and livable. That I think we've been able to do this for a bunch of years. We've had talked about all these different COVID, risk on, risk off, all these different things. But me thinking about that, how do you build a sustainable organization that, think about some of the organizations that are out there, what are some of the characteristics, right? I think I think fundamentally it comes back to the leadership and the management team, and also being properly capitalized, and also candidly, making sure that we react to the market every day. I'll tell you, I can sell you right now a beautiful rotary phone that's the best and first in class. We've super engineered that. Market moves. So, we may think the market is here today and I'm going to stay here. I'm going to defend that, but the market moves and we need to be responsible and thoughtful about that.
There's a book called Who Moved My Cheese. Have you read it?
I haven't, but I've heard of it.
It's a great book. In fact, I have my two teenage daughters reading it right now. They're going to read it for the summer and they have to give me a verbal book report on it. Nothing serious, but it's important that as business owners, to your point, you stay flexible and agile, and you got to move where the market moves, right? That beautiful rotary phone is great, but the market's well beyond that at that point, right? So Jack, thank you for your time. Thank you for your wisdom and your knowledge and your experience. And for those of you that will want to learn more about Jack, we'll have information about him in the description section, his LinkedIn profile, um, Summer Street website, right? How to look him up, and any parting words of wisdom you want to leave with the viewers as founders, owners, business entrepreneurs.
Show up every day. Love it all. Show up every day and love it all.
Wonderful. Jack, thanks for being on Uncommon Wealth. And I'm going to circle back around with you offline. You said something about the succession of the business and the sustainability of the business that I think I've got a couple ideas where I can possibly help you out there.
Thank
All
you,
right.
John.
Thanks,
We
Jack.
appreciate it.
Appreciate it.
Thanks, guys.